Hey everyone, this is Alex Bullisbach, your managing advisor and founder of Cottage Hill Capital, and welcome to this market and economic update. In this video, we'll discuss the key themes shaping markets as we enter into the last quarter of 2025. We're going to explore why stock valuations have climbed toward historic levels, what the Fed's recent rate cut means for investors, and how to think about policy uncertainty in the current economic environment with the recent shutting of the federal government. These topics are particularly important right now for us because markets are sending quite conflicting signals at the moment. We're reaching new highs while economic data shows signs of potential weakness. Understanding these dynamics can help provide perspective during any uncertain time, especially the one that we might be headed into. All right, everybody, for our first slide today, let's start looking at where valuations stand. Now, one of the most important considerations for long-term investors is understanding what you're actually paying for the market itself. Valuations tell us this by comparing price of that stock to underlying fundamentals like earnings and cash flow. Now, this chart shows the Shiller price to earnings ratio for the S&P 500 over the last, decades upon decades. And what we're seeing is that the S&P 500 is approaching levels last seen during the dot-com bubble of the late 1990s. Now, this really should not come as a surprise to very many people. The S&P 500 has climbed 34% since its April low, resulting in double-digit gains for the year overall. Now, technology itself inside of the S&P 500 has seen a significant rally. With the Mag 7 stocks that we all know and love, they're up 61% since that same April bottom. Now, it's important to understand what valuations do and don't tell us. They're not market timing tools, and they do not predict short-term movements. Instead, they serve as inputs that allow us to use them as asset allocation measures to see where value still lies within the broader overall market. The good news is that not all parts of the market are equally expensive. And for that creates opportunities for investors with more broader perspective and longer time horizons to enjoy the opportunity to buy things possibly at a discount. Now let's turn to what the Federal Reserve is doing and why it matters to you, the investor. The Fed cut interest rates by a quarter percentage point in September, and they resumed its easing cycle after holding rates pretty much steady throughout much of this year. What makes this cutting cycle unique is that it's happening while the economy remains in an expansion and markets trade at all-time highs. Historically, the Fed has cut rates in response to economic crisis or recession fears. This time, they're trying to normalize policy after the rapid tightening that we saw begin in 2022. The key driver for the Fed's decision has been the weakening job market. Now, take a look at this chart, the annual payroll revisions. For instance, it shows the preliminary payroll revisions data that suggests 911,000 fewer jobs were created over the past year than originally reported. The Fed is essentially trying to get ahead of the potential weakness rather than reacting to the crisis, which we can all applaud. For investors, rate cuts like this typically provide support for both stocks and bonds if the economy remains strong. Finally, let's discuss what recent market volatility and policy uncertainty mean for your portfolios. After significant volatility driven by tariffs earlier this year, market volatility and economic policy uncertainty, they've improved. Definitely. Looking at this chart from early in 2025, spiking and now starting to meander down. However, as long-term investors know, periods of market calm can change fairly quickly. Current events like the government shutdowns and ongoing tariff discussions could create short-term volatility, even if their long-run effects are fairly limited. For investors, this uncertainty may feel uncomfortable, but it also is what drives long-term portfolio outcomes. The last several years highlight the difference between what investors fear and how the markets actually performed. Rather than viewing uncertainty as something to avoid, successful long-term investors that work with Cottage Hill Capital recognize it as a feature of markets and that creates opportunity. We hope you found these insights helpful as we enter into the fourth quarter. If you would like to learn more about any of these topics or discuss how they relate to your specific situation, please don't hesitate to reach out to myself or anybody here on the Cottage Hill Capital team. We look forward to speaking with you all soon and creating more content like this that brings education first. Again, this is Alex Bullsbuck, your managing advisor and founder here at Cottage Hill Capital. And I'll see you guys here in the new year.